I put out a short video in February of 2023 and I titled it, Retire Rich in 10 Years with These 9 Stocks. I rarely see YouTubers or analysts check back in with their bold takes or their predictions, and so I wanted to check in on that video and just see how it's doing about 2 years later. I'm going to show you the video that I made 2 years ago, and then I'm going to show you what would happen if you would have put $10,000 into each one of those 9 stocks back then, and where you would be today. I'm Nolan Govea, my students call me Professor G, and I made this channel to make investing simplified. Let's check in at what I said 2.5 years ago.
These companies aren't the craziest or the most fun, but they are the ones that are going to get you consistently to build that generational wealth. Warren Buffett says, when we own portions of outstanding businesses with outstanding management, our favorite holding period is forever. We need to be looking for companies that we can hold forever.
So I'm going to show you how many shares you would have gotten with $10,000 back then had you invested into it. Then I'm going to explain why the stock is up or down very, very quickly. And then I'll show you exactly how much you would be at had you invested that $10,000 2.5 years ago. Some of them are up, some of them are down. Let's check it out. So Apple was at $156.93. So $10,000 back then divided by 156.93 equals 63.72 shares. The price now of Apple in 2025 is $211.72. Between 2023 and late 2024, Apple saw a strong rebound from the 2022 downturn. iPhone 16 and the budget-friendly 16e drove a year-over-year 13% growth in iPhone revenue during Q3 of 2024. Apple's high-margin services division, the App Store cloud subscriptions, has been a big profit driver, growing mid-teens in recent years and smoothing out hardware cyclicality. So had you invested $10,000 into Apple back then in February of 2023, at the price now of $211.72 would equal out to $13,490.80. Solid profit for just 2 years or so. Now on to Microsoft. At that point, it was $262.66. So $10,000 invested divided by that share price equals 38.07 shares. The price now, today, in 2025, is $526.01. It's all about AI. Microsoft went all in and invested so much so early into AI and got that thing started strong. Microsoft's stellar rise since early 2023 is built on the intersection of booming cloud and AI momentum, consistent earnings beats with improving margins, and effective shareholder returns, all supported by massive but strategic reinvestment in future infrastructure. Microsoft has ramped up capital expenditures, tens of billions annually, to build out AI/data centers while still generating robust free cash flow of about 29%. So $10,000 in 2023 is now worth $20,025.20. And this is just the share price appreciation. If you would have been reinvesting the dividends all along, you'd even have more money. So Coca Cola is $59.42, so $10,000 invested would have got you 168.29 shares. The price now of Coca-Cola is $69.35. Coca-Cola is up about 15% in total, but it did see a pretty massive drop at the middle and end of 2024, but has recovered strong this year. A 15% total price gain is nothing compared to the first two, but we need to keep in mind that this one also has a solid dividend around 3% and has been very consistent with that. Investors have favored KO as a defensive play during uncertain times. Tariff noise, inflation concerns, and market-seeking stability boosted KO's appeal, especially in Q1 of 2025, when Coca-Cola shares soared about 15% at that point, that recovery, while broader indexes fell. Its 63-year streak of increasing dividends and high free cash flow solidify Coca-Cola's reputation as a dividend king and anchor in portfolios. $10,000 in 2023 is now worth $11,670.91. Again, for this one and a couple on this list, if you would have been reinvesting those dividends right back into the company shares, you'd have even more money right now. Now, pretty much all these stocks that I'm talking about today are buy and holds pretty much forever because they're solid companies with solid value. So I'm excited to share with you today's video sponsor, Beckett Seaman, who exemplifies that exact same sentiment. Buying Beckett Seaman is like buying a stock with strong fundamentals, not flashy, but built to perform over the long haul. This is the footwear equivalent of a high conviction, long-term stock pick. This is about making calculated lifestyle investments that pay off over time. I recently got my pair of the Dean Oxfords, which blew me away. Just like everything in my portfolio, I keep everything in my life quite simple, and I only spend money or invest in things with true value. For me, that means fewer, better items. This quality of a shoe, I would expect to be $500 to maybe $700, honestly. But the best part is these cost a fraction of the bigger name brand prices. Beckett Seaman's made-to-order model cuts out the usual retail bloat. No middleman, no overproduction, no storage overhead. That efficiency translates into premium quality at a fair, rational price, just like buying a strong stock before it becomes overpriced. Returns compound over time, in performance and in style. The Dean Oxfords are a durable, long-term asset in your wardrobe. Resolable, Blake construction, full-grain leather that ages like a portfolio, and timeless design. Free shipping, free returns and exchanges, and a 30-day money-back guarantee means there's little risk trying it out. Check out the link down in my description to get some sweet Oxfords like me, or to check out all the great products they have. This next one was a shock, and this one's Costco. Costco's price was $517.98, so back then $10,000 would have got you 19.31 shares. Now the price is at $962.74. Costco's stock surge is overwhelmingly because of its memberships. In late 2024, Costco raised its annual membership fees for the first time in 7 years, adding about 4 to 5% to fee income. Despite concerns, renewal rates remained rock solid at 93% in the US and Canada. As of mid-2025, Costco had 78 to 79 million paid households, up 6 to 8% year over year. High margin recurring revenue from membership fees adds stability, even when merchandise margins are tight. $10,000 in 2023 is now worth $18,590.51 today. Next is United Health, and back then it was $477.22, so $10,000 got you 20.95 shares. The price now, $246.62. All right, I got this one wrong. But in April of 2025, literally just 3 or 4 months ago, the stock was at $599, so my call was looking good. United Health is under civil and criminal investigation by the DOJ related to alleged Medicare Advantage billing and fraud practices. It's also faced damning reports that it paid nursing homes secret bonuses to avoid hospital transfers, raising ethical, legal, and reputational red flags. The company disclosed it may face up to $1.6 billion in settlement costs tied to these investigations. United Health faced a steep surge in patient care expenses in 2025, especially with its Medicare Advantage segment. Medical costs jump about 20%, pushing the medical loss ratio up towards 89 to 90%, and trimming net margins from around 6% to 4%. Many have asked my thoughts on UNH. This is still a market leader with a deep moat. It's still the largest health insurer in the US and owns Optum, a powerhouse in healthcare services, pharmacy benefits, and data analytics. I think it will eventually recover, but I don't think it's going to happen till the end of 2026, probably more so in 2027. Long-term investors may make some good money on this one, but you're going to have to be patient, and there may be a good portion of time where this thing looks scary. It looks like it's never going to come back. I do think that it'll come back at some point though. $10,000 in 2023 is now worth $5,166.69. So yes, sometimes your money can get cut in half just that quickly. Stock picking is not easy. The next one's waste management, and that one was at $150.94. So with that $10,000 in 2023, you would have bought 66.25 shares. The price now is $231.46. Don't sleep on this boring trash company. Look at that 5-year chart, and then look at the all-time chart. This is just a nice chart overall. Waste Management has consistently raised prices, average price yield around 6 to 7% annually, while also improving cost control through automation, better logistics, and reduced driver turnover. This resulted in a jump in its collection and disposal margins to historic highs. Additionally, WM has invested heavily, over $1.4 billion, into recycling automation and renewable natural gas projects. These initiatives are projected to generate $760 to $800 million in combined EBITDA by 2027. $10,000 in 2023 is now worth $15,334.23. The seventh stock I had on my list was McDonald's. McDonald's back then was $263.92, and so you could buy 37.89 shares with $10,000. The price now is at $307.90. As someone who has health and fitness as a high priority, I don't really love this company, but purely financials and trends, they are definitely a sustainable and solid stock to hold, and they do have a very solid dividend as well. McDonald's gains since 2023 have been fueled by a pivot towards affordability and value, strong international recovery, and digital and loyalty investments that are rebuilding customer habits and resilience. $10,000 in 2023 is now worth $11,666.33. Alphabet, or Google, back then was $107.14. So with that $10,000, you could buy 93.34 shares. The price now is at $195.17. It was all the way up to $205 at the beginning of 2025, so that was even more growth. But recently it's had some investor shakiness, especially with the idea of ChatGPT, and a lot of people just thinking that that's going to take over search, or people are just going to stop using Google for some reason. I'm not sure why they think that it's just going to totally take over. But then also Google has been going through a couple of monster lawsuits, and so there is some uncertainty there for sure. I've been buying this stock like crazy since last year because of these reasons, and I really think it's in value territory, especially for how crazy good these numbers still are. Look at this dominance of search online. All those lines down there are the competitors. Google's by itself, up here, averaging close to 90% of the search market worldwide consistently. Alphabet's legacy ad business, search, YouTube, and brand ads continually delivered strong growth, with ad revenues rising around 10 to 14% annually through mid-2025. Alphabet also owns many companies within the company. YouTube is the #2 search engine globally, still monetizing short subscriptions and streaming. Waymo, it's the leader in autonomous driving with commercial service in several cities. DeepMind, breakthrough AI research with AlphaFold and Gemini, and it has the Android ecosystem, which powers the majority of global smartphones. These assets provide optionality in future trillion-dollar markets. $10,000 in 2023 is now worth $18,217.17. The last one on my list is none other than Berkshire Hathaway, which back then was $310.07, and so with $10,000 you would have 32.25 shares. The price now is at $467.14. Obviously, this is one of my favorite companies and one of the biggest individual company stock in my portfolio, along with Microsoft. Right now, most are worried that Buffett is going to be moving on at the end of this year, which he totally is. And so they think that the company's not going to perform as well. And so the stock has actually been down over the last couple of months because of that and for some other smaller reasons. Berkshire Hathaway is a blue chip, low risk investment with a well-diversified portfolio, exceptional capital allocation, and strong cash flow. It's an ideal holding for investors seeking long-term stability, modest growth, and inflation protection, especially if you value a hands-off approach to investing. I believe that Warren Buffett has prepped the next CEO, Greg Abel, well, and is leaving him with over $340 billion in cash to go find some steals in the market, and also to keep this company very, very safe for a very long period of time. $10,000 in 2023 is now worth $15,065.27. So altogether, with those 9 different stocks, $10,000 into each would have been $90,000 invested in February of 2023. As you can see on the screen, that $90,000 would now be worth $129,227.11. So you would have made almost $40,000 in just 2 years which means you would have had a gain of about 45% within 2 years. And if you're like me, you would have just made sure that each one of those company stocks would be reinvesting the dividend or dripping the dividend right back into the company stock. And so you'd actually be up more like 50, maybe 55% just in those stocks over those 2 years or so. Now there's a secret system that less than 1% of people follow, and that's why less than 1% are truly wealthy. To truly get to that level of wealth, you need to know this secret system, and so I broke it down very simply in this short 11-minute video. So if you could spare me 11 minutes, this is gonna give you the tools to be able to go out and double that net worth as soon as possible. Or check this video out to keep you going strong in investing, and remember to keep investing simplified.